This question asks, in China, why may a lower birth rate lead to slower growth in real GDP per capita? So let's think about the drawback of lower birth rate. So lower birth rate means that we have like less workers in their 20s and 30s, right? And has a higher like proportion of workers in their 60s and 70s or something, or even older. But we know that we have like say more percentage of old workers, but lower percentage of young worker. But we know that for old workers, they are less educated, they're less healthy, they are less productive. So but labors are a very important factor in the production process, right? So that means that if we have a lower birth rate and we have like more percentage of old workers, will lead us to probably a real GDP decrease. So that's a result of a lower birth rate. And the second part of this question asks about why might high level of spending on investment in China lead to high rate of growth in the short run, but not in the long run. So let's think about what do you mean by spending on the investment. So spending on the investment will actually lead to higher rate of growth in the short run because it will move China along per worker production function, but it's not shaping up the production function. Okay, I will explain it. So the reason is because of the diminishing return capital. I hope you guys remember the graph. So remember, we can draw a graph, and this is the amount of workers we use, and workers we use per capita, and this is amount of like the real GDP per capita. So if it's a diminishing return to capital, it means that the curve is something like this. So that means if we are moving along this curve, so if we are trying to invest a lot, so this is capital here. So if we are trying to invest a lot of capital, actually we'll only see an increasing a movement along this curve, but we cannot shift up the curve. Only if we shift up the curve, we can get a real GDP increase in the long run. So if we only try to invest more and more capital there, so actually the economy is trying to move along this curve. And we know that diminishing return to capital, even if we invest huge amount of capital, economic growth or real GDP growth is actually pretty low in the long run. Only if we improve the technology, can lead to an upper shift of this curve and will definitely lead to real GDP growth in the long run.